Hello and welcome to this week's episode of Conservative ETF Investor for the stock market update. Today's date is July 22nd, 2017. I am your host. My name is Ken, and let's jump right into it. Right now we're looking at the Conservative ETF Investor homepage. And on the home page, you will have the link to this video. Once this video is done, I'll upload it right here, as well as our current recommendations. The most important thing for you to know about today's current recommendations is our current posture is still on a hold for all of our 7 ETFs based over our 5 asset classes. To learn more about our recommended portfolio, you can come over here to Portfolio Ideas. Here you will see the 7 ETFs and across the 5 asset classes that we follow are recommended percentage allocations. And that's about it. And of course, everything else about the website here on the homepage. Down at the bottom, you can also drop me an email if you want to. Okay, that does it for the website for Conservative ETF Investor. Let's jump into how the portfolio has been doing. So far, the portfolio has gained, since our buy recommendations, 16.53%, not including dividends. To get the dividend amount, come back over here, scroll down, and you'll see that the total of all dividends at our percentage allocations for our recommended portfolios is 1.8%. So you can add 1.8% to this number here for the total return. Now for calendar year 2017, you will see that we've gained 9.17%. And if you want to compare that against the S&P 500, you can go to My Holdings and see that the S&P 500 has gained 10.18%. So it's approximately trailing the S&P 500 by 1%. But when you come over to our recommended portfolio, our beta is 0.63%. The S&P 500 has a beta of 1, and what that means is that this portfolio is much more conservative than just owning the S&P 500. That is the benefit of having a well-diversified portfolio. Okay, now that takes us to our charts. We're going to get right to it. Our chart, the first chart that we're going to look at is the S&P 500. And we use the, let me get rid of that inspect mode. We use the weekly charts. As you can see here is the word weekly. And we use a 5-year time horizon. We use 2 moving averages, the 17-week and the 34-week exponential moving averages, which is the blue and the green, the red. And the S&P 500 gained 0.54% for the week, and still trading in this upward wedge pattern towards the upper end of the pattern. This is the thumbnail. You can see how we've done really well. And the S&P 500 is at all-time new highs. Excellent. Down here for our indicators, our momentum indicators, we use 2 momentum indicators. The first top one is the MACD, moving average convergence divergence at default settings, and the one underneath that is slow stochastics at default settings. Here, starting with the MACD, let's see here, numerically is 5.21 and the signal line is 5.22. So the MACD is below its signal line, which is negative, but you can see that it's kind of running just parallel to one another. So there's a lot of whipsaws back and forth, so that doesn't quite mean that much. The important thing to note is that the MACD is at very high levels right here. And because this is an oscillator, this will need to soften up and come back down. And so this is at a pretty high level. For the slow stochastics level, you can see that numerically we are above the signal line. You can see it here in the thumbnail quite well as well, and we're above 80. So that's bullish plus bullish. Okay, so that is it for, then here's our buy recommendation date here. By the way, this is a candlestick chart. Each one of these bars is called a candlestick and it represents 1 week. So here in the thumbnail, this furthest most candlestick is representing the last week of trading. Okay, let's move on to our next chart that we're going to look at. The chart is QQQ is the symbol, which is our technology NASDAQ 100 shares. It had a positive week of 1.4% for the week. Coming over here to the thumbnail, you can see the volatility, how we were coming down. Then the week previous to last week was a strong week, and then we pushed up from there. And it looks like we're at all-time new highs here. Let me get rid of that inspect mode. Okay. And looking at our indicators, the MACD has bottomed and is beginning to get above its signal line, but it's still in this very high territory range. And the slow stochastic was coming down, dropped down below 80, but has since bottomed and is above its signal line. And it's at 81.57, so it has crossed above 80, bullish plus bullish. All right, that takes it for the NASDAQ 100. Let's move on to our next candlestick chart, which is going to be IWM. IWM is the Russell 2000 small caps. So here's for your diversification across all broad spectrums of the U.S. stock market. We had a total gain of 0.58% for the Russell 2000 small cap stocks, and you can see how we've been trading pretty nicely there in this kind of a tight range, just drifting upward slowly. We were trading in this rising trading channel pattern, and we have since been hanging around this lower support and just bouncing right through it and up and up and up and up. So that's what it's been over the last few weeks. Going down to our momentum indicators, you can see that the signal line and the MACD are about parallel, and the slow stochastics is above 80 and it's above its signal line, bullish plus bullish. So all good here. That's IWM. Next is VEU. VEU is the Vanguard All World excluding the United States ETF. So there's your global diversification. It had a positive week, gaining 0.39% for the week. You can see that we had a rising tops resistance line. We broke above that. Now that is a support line. Also, we weren't trading in this rising wedge pattern, and we broke out bullishly to the upside, crossing above 2 resistance points, and has not closed below either one since. Now we are over here, all-time highs, coming over here to the signal line. Last week you can see was an extremely bullish week, and since then we've gained some, but we're losing momentum, it appears. MACD has bottomed and is above its signal line. Slow stochastic bottomed above the signal line and above 80, bullish plus bullish. It's a strong looking chart pattern. Look at the way the 17 and 34 week exponential moving averages are just, it looks like they're going right to the sky. Actually makes me kind of nervous about that. All right, so that's VEU. TLT. Here is a more interesting chart pattern. Had a very positive week, gaining 1.91% for the week. This is bonds, by the way. This is 20-year Treasury bonds. So this is your bond portfolio. We do recommend you own bonds directly as opposed to a bond fund, but we track a bond fund here for the purposes of this portfolio. You can see that we had a few weeks back, we had 2 negative weeks, a real big down week here and a real big down week here. Finding support somewhere around the 122.70 level and has since turned up, and what a strong week was the current week. Coming down here to our momentum indicators, you can see that the MACD came down, never crossed below its signal line, and is moving up. The slow stochastic is still below its signal line, but it has clearly bottomed and is traveling towards its signal line. So it looks like we are going to build up the momentum now to come back up to this resistance line, 129 level thereabouts. Okay, so that's it for TLT. Let's move on to the next one, which is our VNQ is the symbol. Now this is, oops, that was a mistake. Let me close that down. This one here is the Vanguard REIT, which is a real estate investment trust. So here's how you can own real estate without being a landlord directly. Paying a nice dividend of 4.4% annually yield. And we had a gain of 0.81% for the week. Now you can see that we have been bouncing around inside of this pattern for quite some time, and we are now pretty close to the upper end of that. Now, I want to take you over to this candlestick, not the current week, but the week previous to the current week, which is this white candlestick here, which is this one right there. I want you to notice how that had a tail coming down, and this here is a support line that we were trading in this channel right here. Well, this ETF was so bullish that it did not even come down to test this lower support line. It stayed above it and has since pushed up above that, and now it's going up towards this upper resistance line. Now there are two resistance lines here. The first resistance line is this one here, which is a declining tops resistance line. We are currently closed directly on that resistance line. We have a tail, this tail right here, you can see we tried to push up above it, but the bears came down and put it right on smack dab on this declining tops resistance line. Okay. Now, if we can get above that, then the next level of resistance is this declining tops resistance line here, which is a little bit more recent. And then if it gets above that, we're looking pretty good up until this one here. Okay. Which is a pretty good distance. Let me just get the inspect mode on there for a moment. If we were to get above this here, we could potentially go up to approximately there, which is a gain of 4.5%. A nice healthy gain before hitting that resistance mark. We shall see what happens. We're still currently in a hold on this position. All right, so let's look down at our momentum indicators. Okay, the first one is the MACD, bottomed above its signal line and turned back up, bullish and bullish. Slow stochastics has bottomed, and has it crossed above? It has not crossed above its signal line yet, but it's about to. At the current pace that it's going, if it stays up here and comes up into that upper resistance line, it should cross above that in the next couple of days. Okay, so that's it for VNQ. Let's move on to our next one, GLD, which is gold. All right, gold has been stuck in a pattern. So here's the symbol is GLD. This is gold. What a wonderful week. 2.13% gain for the week. Coming over here into the thumbnail, you can see that 3 weeks ago we had a negative week. We bottomed the second candlestick back. It was a positive week. It found that support, pushed up, closed right there. Then it gapped up this week and has not turned back, and now we've closed at the upper end of that. But look here at our long-term chart. This is a declining tops trend line that has been in place for multiple years. We cannot get above it, close above it with conviction, and trend upwards. Eventually that should happen. It hasn't happened yet, and it's been a long time since that's happened. We are waiting for that to happen. But this declining tops trend line and this support line, which goes all the way back to 2013, are coming to a where they're going to meet. Something is going to happen. It is either going to break down or break up. personally, I think it's going to break up. My expectation is for it to break up, and I'll explain why. Because this is a support line. When the ETF comes down into this support line, yes, it did break down here, but it has since broken up above it, and it did break down here, but it is above it again. So for most of 2017, it's been trading above this support line. I believe it's going to stay above it. My expectation is for it to break above this declining tops trend line and to start moving up. The next level of resistance would be in this 130 level, which is a pretty good gain because we're at the 120 level now. We're exactly at 119.26. Momentum indicators. MACD has bottomed and is traveling up towards its signal line, and it is at the 0 point, meaning it can go in any direction it wants to go. The slow stochastics has bottomed at the oversold level. Okay, and did it cross above its signal line? Yes, it has. It has crossed above its signal line. So these are pretty bullish indicators. It appears as if the momentum is on the side of this ETF. So look out for gold. All right, so that is our last ETF chart that we were going to look at. Now we're going to look at the VIX. We have two more charts to look at today. The first one is the VIX, which is the volatility indicator basically for the S&P 500. And this is a negative correlating index. Oh, and by the way, the chart pattern has changed. Instead of using the weekly, we use the dailies, and we use a 1-year time frame for this volatility indicator. When the indicator is going down, the S&P 500 is going up. You can see this is a chart of the S&P 500 down here, and you can see that when this drops down, the S&P 500 comes up, and when this goes up, the S&P 500 comes down. So it's a negative correlation is how that's referred to as. We are down here at 9.36, the 50 days below the 200 day, and the indicator is below the 50. These are all very bullish signs. The only bearish thing that makes me nervous is the low level that we're at. These are extremely low levels when you're below 10. And when you are below 10 and you're at the lowest levels, the only place for it to go is either sideways, down, or up. And the probabilities is that it's going to go up. And when that goes up, that's when the S&P 500 goes down. Okay, so that is the VIX. The next one is the VXN. The VXN is the volatility index for the NASDAQ 100. Okay, same thing as far as the chart goes. It's a daily chart and a 1-year time frame, and same thing, negative correlation, inverse correlation compared to the QQQ, which is the NASDAQ 100. We have the symbol QQQ down at the bottom with the chart down here. And we also use the MACD to see what that's doing. Now, currently, the index is traveling below the 50 and the 200, but the 50 is above the 200, but it is now traveling down, ready to cross below the 200, which are bullish indicators for the NASDAQ 100. So that is the VXN, and that concludes the wrap up of this week for Conservative ETF Investor. I want to thank you for watching. I hope you've enjoyed it. Give me a like, and please tell your friends to watch the video as well. And thank you, and I'll see you later.